Hello and welcome to Policy Watch, your weekly date with the biggest business stories, their context, their relevance and their impact. I'm Surabhi Upadhyay. This week I'm joined by Dinesh Narayanan, senior economic journalist, to talk about everything that made headlines in the world of business. Dinesh, it's great to have you in the studios. Thank you for taking out the time. So let's straight away get started. Now, the election juggernaut rolls on, and so do the controversies, the dollar flows and the stock market euphoria. But the week's biggest story perhaps lies beyond all of this frenzy. From being a small company set up in Gujarat back in 1983 to being the largest pharmaceutical company of India and the fifth largest generics drug maker of the world. That's a spectacular rise of Sun Pharma, the company that stunned everyone this week by acquiring ailing peer Ranbaxy for nearly $4 billion. Here are the details.
This landmark takeover will make Sun Pharma the biggest pharmaceutical company in India and the fifth biggest generic drug maker in the world. The deal brings Ranbaxy Laboratories back to an Indian company some 6 years after it was sold to Japan's Daiichi Sankyo for $4.2 billion in 2008. Sun Pharma will now pay Daiichi $3.2 billion for control of Ranbaxy Laboratories. The deal relieves Daiichi Sankyo of a troubled subsidiary that has diverted resources and weighed on profits. Daiichi Sankyo will continue to hold a stake of about 9% in Sun Pharma, valued at about $2 billion, compared with the $4.2 billion it paid for a 63.9% stake in Ranbaxy in 2008. What happens to Ranbaxy shareholders? Under the terms of the deal, Ranbaxy shareholders will get 80 shares of Sun Pharma for every 100 Ranbaxy shares they hold. Sun Pharma claimed it would free Ranbaxy from persisting manufacturing problems. The deal will lead to a monopolistic situation with both Ranbaxy and Sun being leaders in the area of drug manufacture, something India's competition regulator will need to monitor closely. Bureau Report, Rajya Sabha TV.
What a deal. And Dinesh, I guess we're talking about this not just because of the money involved, but the nature of this transaction. Indian promoters rarely sell out. I mean, big consolidation in big Indian business houses is a rare thing in the Indian landscape. What did you think of this sudden announcement last Monday?
Well, as far as Sun Pharma is concerned, Sun Pharma has a history of acquisitions. So they have grown through acquisitions. I think about a dozen acquisitions since the company started, including an international one, which created a lot of news before the Ranbaxy one.
You're talking about Teva?
Yeah. So the Israeli acquisition. Yes. So after that, and they got a person from Israel, from Taro, to come and run their company for them here. Right. He is also supposed to be quite an aggressive deal maker, and he's supposed to have played quite an important role in this one to convince Daiichi to sell out. Yeah. As far as Ranbaxy is concerned, it has not been doing well. It's quite well known, and Daiichi has not been able to manage the company the way they would have wanted it to. But then the Japanese are also slightly conservative. As far as Sun Pharma is concerned, he's demonstrated his ability in operations. So I guess it would work out for
you know, this is where the amazing part comes in, and one wonders, only time will tell. But here is a company which has all of its 4 main key plants under a US FDA ban right now. There is nothing they can supply from these plants to any of their US operations. What do you think that Sun might be able to differently, which the Japanese parent really couldn't, and literally had to give up and wash its hands off this asset?
The understanding of the Indian environment, understanding of how to work in this country. I mean, he's adept at that, and he's demonstrated his capability in operations. So, I mean, if operations is their strength, I mean, we would expect them to turn it around and get these problems, solved somehow. And that's what they're saying. They would do it.
And interestingly, in a lot of interviews that followed this announcement, we heard Mr. Dilip Sanghvi talk a lot about emerging markets. I don't know, do you think this would be some kind of a strategy, since the US is such a struggling market for Ranbaxy, start looking elsewhere? Because till now, Indian generic story is equal to United States of America. I mean, that's how it's been in the last couple of years. Is that changing, you think, with this
It
deal?
could remain for some more time as well. So, see, in the next 3 to 5 years, there are about 80 to $100 billion of drugs going off patent. So, and he is positioning himself for that. I mean, that market is huge. And if you look at governments everywhere, they are trying to reduce their healthcare costs, and generics is the way to go. So, there are a lot of countries in this world who are spending upwards of about 7-8% of their GDP on healthcare, which means that the demand for drugs would increase, and to keep their healthcare costs low, they would have to depend on generics. So, that market is certainly there.
But then let's talk about the US as well. You can't ignore that market for whatever it's worth. It is the largest market for most of these companies, and so many of them are still struggling. You name it. Work hard. Sun Pharma itself, one of their plants came under scrutiny not too long ago. What's going on with the US and the pharma industry?
Well, the US FDA has always been pretty strict in their inspections, and especially when it comes to developing markets. I mean, I would presume there is some amount of competition also involved there. I mean, from US companies, that would also be probably at play. I mean, this is these theories always circulate, but then US is the biggest market. It spends about 17-18% of its GDP on healthcare, and a large number of generic drugs, large number of drugs going off patent. These companies do have a very good opportunity there. It's only a matter of getting these few plants in order.
It's, I mean, I don't want to extrapolate too much beyond the point because the deal is not even completed as yet. But will it play, will scale at all play its part when this new entity, the Sun Ranbaxy entity, looks out and goes to these markets, including the US? Because now we'll be talking about the 5th largest generics maker of the world. Will that at all help pull some muscle in markets like the US, or you think it'll be irrelevant?
Yeah, why not? Because the presence across 5-6 continents, I think 5 continents, right? And
I think 47 or 46 facilities, production plants,
which is huge, across the world. You have that kind of reach, then it becomes more easy, or rather to in terms of maintaining your margins, getting your economies of scale. So obviously, yes, it would help them a lot.
Thoughts on some of the pharma doyens of this country? It's been a very interesting story from Mr. Singh, who sold out initially in the original Ranbaxy promoter. Mr. Ajay Piramal again chose to exit at what many called a very handsome price. And now the rise of Dilip Sanghvi.
But again, a generics player. It's not really, so he is continued to occupy that space, right, and trying to expand himself there. We kind of saw about 10 years ago, you saw a lot of companies getting a lot of publicity, in fact, that they are getting into research, new molecules. There was Dr. Reddy's, there was Ranbaxy itself was there. There was a lot of action, there was a lot of excitement at that point of time, but then slowly it kind of fizzled out. So we have not really proven our ability to, discover new molecules or create new drugs. I mean, product has always been an issue for India, right? I mean, whether it's the pharma industry or it's the IT industry, whichever industry. Okay. And we are not able to crack that. So I suppose it's better to be a generic player and a large one at that. You would be a competitor.
Let me cap it off with the way the market is looking at the pharma sector, and of course companies like Sun and Ranbaxy. Let's not talk about this whole talk about SEBI investigation into the share price. That leaving that aside, but a lot of hope has been placed on these companies despite the issues that we discussed. Pharma stocks have been among the best performers in the last 1 year or so. Do you think some of that is set to continue? Is that placed on actual hope from the industry, or has that been just a mere function of the market itself and the mechanisms and the fact that, let's say, cyclical parts of the market have been lagging behind?
I think it's the nature of the industry, right? I mean, healthcare is practically recession proof. Who doesn't fall ill? So I guess pharma companies will always do. I mean, even in the past 5-6 years when the market was a little depressed, pharma companies generally had been doing well, right? So I don't think the pharma industry per se would be affected by the downturn or any of those kind of things. There might be other issues like what Ranbaxy had, but I don't think as an industry it would have a problem.
Okay, on that note, we'll take a very quick break. On the other side, we shift focus and talk about macros. Lots of numbers have been released, and the IMF has come out with its forecast for this year for India. Back with that in just a minute. Welcome back here with Policy Watch. Now, while election mania kept markets buoyant this week as well, economic news has been a bit mixed. A weak reading on February IIP and widening trade deficit in March were the red flags on the macro front. However, the International Monetary Fund provided a silver lining by projecting higher GDP growth in India this year. Take a look.
After dipping growth in the last few years, the International Monetary Fund projects a turnaround on the back of expected government efforts to revive investment. From an estimated 4.9% in 2013-14, GDP growth is expected to revive to 5.4% in 2014-15 and further up to 6% in 2015-16. The IMF projects, however, that inflation driven by high food prices will remain in double digits in this fiscal as well. It cautions that this factor could slow down economic recovery. In its latest World Economic Outlook, IMF said global recovery was becoming broader, but external challenges remain for emerging economies. The IMF forecasts global growth to average 3.6% in 2014, up from 3% in 2013, and to rise to 3.9% in 2015. It said the major boost to global growth has come from the United States, where annual growth in 2014-15 is projected to be above the trend at about 2.75%. IMF also maintained its projection for China to be 7.5% this year, as its leaders are trying to return the economy on a more balanced and sustained growth path. Emerging markets and developing economies would continue to contribute more than two-thirds of global growth. GDP growth in emerging economies is projected to increase moderately from 4.7% in 2013 to 4.9% in 2014 and 5.3% in 2015. Bureau Report, Rajya Sabha TV.
Dinesh, so the numbers, and that's what I've been looking at, wondering if there's any reason to worry here, because of late, we went into the last couple of months feeling euphoric. Current account deficit is falling, numbers are looking good, fiscal deficit is in check, seems to be. But look at what's happening now. The IIP number that was released earlier this week, negative growth. Most economists were expecting slight recovery to continue. Then we saw the trade deficit numbers for March. Overall deficit for the year has gone down, but the March deficit has gone up. And then now people are talking about inflation, particularly food inflation again. What's happening? Are we turning the corner on the good data, the string of good economic data points?
No, see, the current account deficit came down, the trade deficit came down when we saw a sudden spike in exports in the past 6 months or so. Not 6 months, I mean September quarter and then later in December quarter.
And we were curbing gold imports in a big way.
Yes, we did manage to curb gold imports. But look at the rupee at that point of time. The rupee had gone down to 69, and that's when the exports started picking up. And then as the rupee strengthened, the exports also started kind of slowing down, and now rupee is at 60 and sometimes threatening to become stronger, and it's probably a direct correlation there. Inflation, it seemed to come under control. The CPI also reduced quite a bit. But the indications of a bad monsoon is probably not a very good thing for inflation. The last year we sustained because the monsoons were good, had good rains, very good crop, so all the vegetable prices which were very high in last summers, you saw all of them crashing while December. By the time it was December, I think potato, onions were available for 10-15 rupees a kilo or something like that. But there are indications that some crops have been damaged. There were unseasonal rains, the unseasonal hailstorms, large tracts of land in Maharashtra, Gujarat, Orissa. So a large number of crops have also been damaged. Vegetables have been damaged. Fruits, standing fruit crops have been damaged. It might be a problem, and the problem is the other issue is that even in international markets the commodities prices might be hardening, which would be so we can't expect to suddenly go out into the market and then start buying. That also might not be possible this year. So
now against some of these worry signs comes the IMF projection of 5.4% growth for this year, and they think it will cross 6, go to almost 6.5. next year. How believable? Do you agree with the projections?
Not, I think it's a little optimistic.
And why do you say that?
Because again, there are two main reasons. One, we need investments. Where are the investments going to come from? Where is the financing going to come from? You are looking at rising NPAs, the banking sector kind of seriously hobbled by this NPAs. I mean, I think the last CARE or ICRA report said that it might go up to 5%. If NPAs go up to 5%, I mean, that's the level which you are looking at, say, sometime in 99, 2000, that was the level of NPAs we had. If we are going back to that level, how are we going to finance anything at all in this country? And most of it, the NPAs are kind of bunched up in the public sector banks, who have the strength to finance large scale projects, kickstart infrastructure projects, other projects, manufacturing projects. So there would be a serious problem in terms of financing, and if you add inflation to it, then you have a double whammy.
But a lot of people have obviously, put all their bets on a new government, stable government, kickstarting, appetite for investment, etc. What happens to then that optimistic scenario? Do you not agree with that?
Well, you can always have optimism, but you also have to find the tools to, do something on the ground. How the new government will do it is something we'll have to see. I mean, if the government has a creative imagination to come up with some new ideas, then yes. I mean, you can always have policies. You can have tax cuts.
Sure.
You can have tax cuts and say that tax cuts will sort of boost the economy. But
then what happens to your fiscal deficit? What happens to your finances?
You have completely skewed public finances right now, and state finances are also not so great right now.
The point that you were just making about bank financing for big projects, because that's going to be the immediate challenge for whichever government comes in. How do you get major projects off the ground? Till now, what we've been hearing from most bankers is that money has never really been a problem. It's about intent, it's about government policy. Finances can be arranged locally or even in the international markets at lower interest rates. But what you just said seems to challenge that theory, that maybe financing itself will, for the first time in many, many years, become a problem. Is that so?
It should be. In my opinion, it would be a problem, because when you say NPAs, you are looking at a lot of companies who have already reached their borrowing limits and have started defaulting or will default in the near future or something like that.
Long restructuring pipelines.
So how many of these banks will be willing to restructure and give them new loans? That question always remains. I mean, it's all right to say that money is not a problem at a very macro general level. But when it comes to, when you have the file before you of a company, will you actually sanction him more money or not? Will you actually try to revive a Kingfisher? Will you actually try to revive some other company like that? It's a moot question.
So then one also talks about the external picture and the export-import data. Exports falling for the second consecutive month. How much of a red flag is this, or do you think this is something that will self-correct depending on the global situation?
Yeah, I mean, IMF also says that the global situation also might improve, right? So if that happens, then yes, probably it's possible that exports might also improve. But then you would also face a lot of competition, right? I mean, which are the sectors, export sectors, which have gone down? One of it is gems and jewelry. Now, gems and jewelry is a very sensitive sector. Unless the American and European markets pick up, they don't benefit so much. So will that happen? Well, I don't know if it will happen in America immediately or not.
Well, one then also talks about looking at the trade deficit and the current account deficit, this whole talk about gold imports and what will be done once the new government comes in to make sure the numbers look good. Critics say that it is, this pullback on the rupee and this current account deficit looking so much better today, so much prettier today. It's something that has been sort of contrived, and it's something that's been arrived upon by curbing gold imports, which is not a very direct way or not a very correct way perhaps to shore up the current account deficit. So what happens to gold imports, and what do you think the new government will have to keep in mind while deciding whether it wants to lift these curbs?
See, theoretically it is a good idea to keep gold imports low, right? Because it's considered to be a non-productive asset, right? But then in the past couple of years, let's say there are reasons why Indians buy gold. One is because they love gold. The other is, I mean, automatically it is.
I think it's one of the best investments.
It's a good investment. You know, especially in the past 5 years, it's turned out to be a very good investment. Now, when everything else in the economy is going wrong, and if you have a solid asset like gold, which is also appreciating, why not invest in it? It's logical, right? Now you're seeing the markets turn around. If this continues, probably a lot of money which would have gone into gold might go into the stock markets. If the debt markets pick up, maybe into the debt markets. If investment picks up, maybe corporate deposits, don't know where all money can go.
Maybe the government should actually think about reviving some of these markets, because the fact is that we've not been able to channelize savings into equity. The debt market isn't deep enough. There's zero retail participation. The real estate market is an opaque creature of its own, you know, of its own. So perhaps there is a need to look at some of these other investment options. Therefore, you naturally curb India's love for gold.
And also the gold buying months are just coming up, really. You know, closer to the second half of the year is when gold purchases go up. So we don't know if it is just a temporary lull as well.
So all things are being equal, of course, a lot riding on these elections, and we're in the midst of the season right now. What are we looking at in the immediate future? Let's say, I mean, after we get to know of the new government and we're looking at, you know, the second quarter, in terms of pure macros, where will the country stand?
See, one thing, probably elections could not have come in a better year, you know, better timing, because this election is supposed to, the total spend is supposed to exceed some $5 billion or something like that. You know, that's about 35,000 crores. It's probably a conservative estimate. Maybe it's go up to some 50,000 crores. I mean, it's like an economic stimulus, right? A consumption stimulus. And the way election expenditure happens, it happens very evenly across the country. Every district, every village gets the money. So I don't think there has been a better
electoral stimulus for the economy.
There is an electoral stimulus to the economy, certainly. So this might carry on for a, you know, and it's all happening in 1 month. I mean, some of it would have happened beforehand also. And if a new government comes in and also pumps in some measures, they will have to show some measures, right? Immediately that the new government has come, and now we are doing this thing to prop up the economy. So maybe yes, some things might be there which might work out very well, along with this pump priming with the elections.
Well, that's an optimistic note to have. And as you said, it's always good to be optimistic. So let's wind it up then. Thank you so much for your thoughts, and thanks for your time for being here. Well, that's where we end this week's edition of Policy Watch. Thank you for being with us. We'll be back, same place, same time next week.